When you enter the world of investing, purchasing the right property is going to be very important for you. Now, before you make the decision to purchase a property, my suggestion is making sure you know what you're looking for. A lot of investors will make the mistake of going out, feeling like they found a deal and not wanting to miss an opportunity, and they purchase the property without a plan. When actually, to be successful in investing, you need to make sure you've got a plan, and then you search for the property that actually fits that plan. So it is the other way around. Now, there are three methods of investing that I want to talk about today. First is the fix and flip model. This is the one most people are familiar with because they see it on HGTV. It's glamorous, it's flashy, you get to take beautiful pictures at the end, and it looks like fun. Now, when you're trying to find the right home here, what's not glamorous about this process is you're going to get really, really good at math. So if you like to sit down, evaluate numbers, evaluate comps, understand all of your expenses, whether it's a hold expense or just the expense of purchasing it itself, or your expenses to sell the property at the end, you need to have an understanding of what costs are going to go into the fix and flip along the way. The right property will be the right price and give you enough room to make the repairs necessary to get an after repair value that will bring you a profit. Many investors have many different strategies in this realm. Some people are looking to make a flat fixed profit, like say $10,000. Other investors are looking for percentage profit, and that might be anywhere from 15% to 25% profit. Whatever your strategy is, get those details in place so that you can purchase the right property from the get-go. Now, if you're looking at purchasing holds, which means you want to find properties that you can hold in a portfolio and put renters in, so that then you can build wealth through real estate in that realm. Investors will identify the right properties in a number of different ways. One of the most popular ways is what we call the 1% method, which is essentially that each month's rent should be 1% of the value of the property. If you have a $100,000 property, you should be getting $1,000 a month per rent for that to be worthwhile. Now, while that is a very helpful rule, it's not always hard and true depending on the area you're searching in. If it is an area with a lot of appreciation, you might be okay with a 0.8% rule to make your purchase. The main thing I want you to do here is when you look at these numbers, evaluate them, do the math necessary to make sure you're on the right path for your goals. If you're working with the right realtor, they're going to be double checking those things for you so we don't make a mistake along the way. Now, the third property you might be looking for is what we call an Airbnb or a short-term rental. These are rentals where somebody will literally rent your property for a few days to a week to a month at a time. And a lot of investors will focus on beautiful, glamorous areas. So like downtown St. Louis or Lake of the Ozarks, maybe even beach property. But it gives them the opportunity to buy unique properties that would be desirable for people to come and visit for short term. The challenge with this is there's even more systems you need in place for while the people are there, prepping the property, deciding how you're going to furnish the property. So the right property is going to be one that you can make desirable, that you can market well, and that you can entice people to come and stay at short term. So there are a lot of different opportunities in real estate. What I think is important for you is when you're identifying a property, you've decided what plan you're going to go with before you start searching for that home.